If you know you want to give money to your kids and grandkids, is it better for you to do that while you're living or at death as an inheritance? While there's a lot of things to think about, one of the key things is the tax consequences. So I want to cover that just briefly today. Now, under current law, we have a lifetime gift and estate tax exemption of $12,060,000 per person. That's the number for 2022. And that means that you can give as much as $12,060,000 during your lifetime and at your death, that combined amount with no gift or estate tax. And since the gift and estate tax is 40%, we want to avoid that, if at all possible. Now keep in mind that that number, the $12,060,000, is going to be cut in half when the Tax Cuts and Jobs Act expires at the end of 2025. So that number is going to be cut in half in the future. It could be cut even more depending on what law changes are put in place. But how it works is that while you're living, you can give away an amount up to an annual gift tax exclusion that doesn't even count against that lifetime gift tax exclusion. And the annual gift tax exclusion amount this year is $16,000. You and your spouse together could give $32,000 per beneficiary without counting against either of your lifetime exemptions. So let's take an example just to talk through how this works. Let's say that Jim and Joan have 10 beneficiaries. They have 2 sons, and each son has 4 kids, and they have 8 grandkids, and they want to give each of those 10 beneficiaries their lifetime exemption amount for this year. That's $32,000 in total for each beneficiary this year. That gets that out of their estate, and it has no impact on their lifetime exemption amount. Well, if they have a cash sitting in the bank, they could just write a check to each beneficiary. They don't have to file any form or report anything because it's under that annual exemption amount. If they went over the exemption amount, then they would have to file a form and reduce their lifetime exemption. But because they're under their exemption amount, there's nothing to do. Their beneficiary does not pay any tax on that money. They receive the $32,000. They can use it how they want. They pay no tax on the $32,000. If they invest the $32,000, then they'll pay tax on the future dividends and interest and gains, but no taxes due on that $32,000. If, on the other hand, Jim and Joan have a stock account that they want to give, let's say they invested $20,000. 30 years ago, it's grown to $320,000. If they sell that stock themselves, they'll pay capital gains on that $300,000 gain. That will be at either the 15 or 20% capital gains rate, depending on how much other income they have. So that would be either $45,000 or $60,000 in capital gains tax. They don't want to pay that. If they give the stock as a gift, each of those beneficiaries would receive $32,000 in stock, but they would also receive that cost basis. It would carry over because it is a gift. And so they would have a $2,000 cost basis on a $32,000 stock. If they sell the stock, they would have to pay tax on the gain, the $30,000 gain that they would share in. On the other hand, if Jim and Joan leave the stock at death, then each beneficiary would get that $32,000 of stock at death, but it would receive a step up in cost basis at that point. And so it would have a $32,000 cost basis. That means that the beneficiary could then sell the stock for $32,000, and there would be no gain due because they've sold it for what they inherited it for, and they got that step up in basis. They could continue to hold on to the stock and let it continue to grow, and they would pay gain on the future growth beyond the point in time that they inherited it. But that, in a nutshell, is a key difference between gifting and inheriting and the way that it impacts some of the income taxes that could be due. It's important that you think through those issues, the type of assets that you have, when you're going to give those assets, what assets would be good to give while you're living, what assets would be good to give as an inheritance, so that you can minimize the taxes that you pay plus the taxes that your beneficiaries pay, so that as a family, you're paying the least amount of taxes in total. And so with that, I'd like to say if you have questions, please feel free to reach out to me. I'd be happy to answer your questions directly because I am here to help you be on your best path for retirement.